Hello everyone, welcome to the most important topics discussion series for the RBWM paper. And this is the lecture 5 in this series, and we are going to discuss the customer requirements and credit scoring. So, this topic again is very important. From the customer requirements, we'll be studying the Abraham Maslow's model about motivation, and in the credit scoring, we'll be studying what is the credit scoring model, what are the scores, how a credit score is developed, what are the signs of a good score and a bad score, and its importance. All right. So when we talk about the customer's requirements in retail banking, it is important because there is the multiple customer groups and different customers have different needs for the financial services, and banks have to develop their products and services based on the customer's needs. So, customer segmentation is important for retail banking. Depending upon the income level, the customer segments are the mass market. Second, we have the mass affluent. Third is super affluent. Then we have the high net worth individuals, super high net worth, and ultra high net worth. Right? So, these are important segments for the bank with regard to the retail banking initiatives. Which one? The first four, from mass market to the super affluent. These are important from retail banking point of view. All right. So, customers are different, their expectations are different, their needs are different. Thus, here we are seeing a theory. We look into the Maslow's hierarchy of needs theory, and this theory helps us understand how the banks structure products to meet the different stages of the need pyramid of the customers. So, this is a theory of motivation. Basically, it says that people, they move from one stage to another. There are different motivational stages according to the needs of the people in their life. So when one need is fulfilled, a person seeks to fulfill the next one, and so on. So there are five motivational needs. These are the physiological, safety, social, esteem, and self actualization needs. The needs are said to motivate people when they are unmet. For example, in the physiological needs, we have the basic needs like food and water. If we do not have a nutritious three-course meal in our day, we will be unmotivated and we would not want to perform any task. Once we get the nutritious food, then we will want safety needs, a good place to live, a secure house that is in a good locality, away from thefts and burglary. Then we have social needs. We want friends and family with whom we can share our happiness and sorrows with. Then we have self esteem needs, which is self worth. We want some worth in our eyes as well as in the eyes of others. And finally, the final stage is the self actualization, where we reach our highest potential. So these are the five stages. The needs are said to motivate people, and the need to fulfill such needs will become stronger the longer the duration they are denied. So when, for example, we are preparing for our exam and the time duration that is increasing, we are not able to qualify any one paper, we have to give a second attempt, so our motivation will be higher, will be stronger, and one must satisfy the lower level basic needs before progressing on to meet the higher level growth needs. And once these needs have been reasonably satisfied, one may be able to reach the highest level. So, every person is capable and has the desire to move up the hierarchy towards the level of self actualization. So, the needs start from the basic requirements and move up the value chain during the life stage progression. All right. Obviously, the need ladder will also move up with the change in the life stages of the customers. So, these are the stages. The needs start from basic requirement, move up the value chain during the life stage progression. Even the banks structure the products and services to match the different stages of the need spectrum. Banks will achieve the twin objective of customer satisfaction and business conversion. So, this model pyramid is very important. Many questions, and every year the institute asks us questions from these five stages. What are the basic needs? Safety and physiological. Physiological needs are food, water, warmth, and rest. Safety needs are security and safety. Then we have psychological needs, which is belongingness and love, intimate relationships and friends. Esteem needs refers to self worth, the feeling of accomplishment. If I'm already working in a bank and I qualify my JAIIB exam, then this will increase my self worth or my esteem. And then finally, self actualization means achieving one's fullest potential, right? So, if my dream was to open a cafe, and after my retirement, I am able to do that, or not even after retirement, after working, or if I want to start a business and I'm able to do that, that is self actualization. Similarly, banks also, according to the need level, provide matching banking, investment, and insurance products. For example, physiological needs are the basic products like core savings account, personal accident cover, housing loans. Then, security and safety needs could be recurring and fixed deposit, life insurance product. Social needs, all the types of personal loans, consumer loans, home loans, car loans. On the investment side and insurance side, health policies for the self and family, retail gold coins, investment products like mutual fund schemes. Then, when will our esteem increase? If I'm able to get the special term deposit product, second housing loan, home improvement or home decor loans. And finally, self actualization needs from the point of view of the customers of the bank are pensioners' loans, retirement solutions, senior citizens' term deposit. So, these are just some examples, these are not absolute. Banks, they may develop products depending upon the customer's base, and they can convert the potential available across the needs of the customers. So these are the examples of the different types of products. So physiological needs, security needs, social needs, esteem needs, and self actualization. So the Maslow's hierarchy of needs is very important. It helps us understand the customer's requirements about service quality, the different products and services which are expected by the customers in different stages of life. All right. Next, we have the topic of credit scoring. When the banks are giving loans or sanctioning the loans to the customers, they have to see what is the past history of the customer. Do they have a good and consistent repayment, or are there any willful defaults in their repayment history? Are the customers craving for credit? They have many credit cards, or are they having a longer credit history or not? So these all questions are answered by the credit scoring, right? So there are four types of risks that the risk analysis they are mainly focused with or they are concerned with. Credit risk is when the customer fails to pay. Business risk is losing money due to the wrong strategy. Market risk is change in the market prices. And operating risk is processing failures. Questions from this will be asked. Very important. Which of the following is a business risk? So you will be given these four options and you will have to choose losing money due to wrong strategy. Or processing failures and frauds is which type of risk? So it is operating risk. Now, when we talk about what is a credit score, a credit score is a statistical analysis of a person's past credit dealings and represents her or his credit discipline, right? So the customer's dealings in credit products like home loans, auto loans, credit cards, personal loans, and overdrafts. So we prepare a credit score for the customer depending upon their past history, and then we decide whether or not we will sanction the loan. For this, RBI has given guidelines. Accordingly, RBI has made it mandatory for all the credit information companies to give a free full credit report without any charge on request once a calendar year to individuals whose credit history is available, right? So this rule will help banks to decide better whether they want to give the credit to the customers or not. All right. Then if we talk about a good credit score, so the credit score values range from 300 to 900. Higher the score, better will be the position of the customer to avail a loan from the bank. So credit score takes a snapshot of a customer's credit report through advanced analytics and turns the information into a three-digit number. So using statistical analysis, we use or we turn the qualitative information into quantitative, and we give a three-digit number to the customer, which ranges from 300 to 900. And any score more than 700 is considered good, right? So the credit information report in respect of a borrower furnished to the credit institutions incorporates all the credit information, the consumer, commercial, in respect of the borrower. So, what does having a good credit score mean? It means that you will get reduced interest rates, easier loan approvals, improved financial opportunities, and access to better credit offers. So, these are the benefits to the customers. If they have a good credit score, these advantages they will get from the bank. Then, if we look at the credit scoring model, a higher score refers to lower probability of default, right? A higher score, more than 700, will tell the banks that there are less chances that the customer might default, right? So, the CICs they build scores using three historical data files. They will see the defaults on the previous credit transactions. They will see the payment behavior or payment history of the customer, whether they have timely repaid the EMIs, and their previous searches and inquiries, whether they have applied for a loan many times in the past or they have applied for credit cards many times in the past. Let us see what is the meaning of credit utilization. Basically, let's say if the safe limit of our credit card is rupees 10,000 and the customer is using only rupees 5,000. So this is a good credit utilization. But if, let's say, the limit is 10,000 and the customer is not only fully using it but also seeking further credit, then the customer could be over leveraging and the score could fall. So, how can we maintain a good credit score? What are the warning signs in a credit score? All of these things are important. Now, which factor is highly utilized by the CICs? So, in India, the CICs are known to include high utilization of credit limit, especially in the case of credit card and the borrower having a higher percentage of unsecured loans like credit card or personal loans. Does the customer maintain their credit card limit or they're over leveraging it? Do they have a high percentage of unsecured loans or secured loans? These factors are considered by the CIC when they are preparing the credit information report or the credit score, right? And banks they have to be members of the CIC, they have to provide information. The CIC can gather information only from the banks. So, if any customer has availed a new loan or the credit card, the bank will have to inform the CIC. All right. So, these are the signs of good and bad credit score. Good credit score will be when you are making the on time payments, when the customer has always maintained a good credit record and used below 50% of the credit card limit. Bad credit score if you have delayed on your repayments, if you are applying frequently for loans or credit cards and exceeding your credit card limit, right? So there are good signs, positive side. which will show the evidence of financial discipline. If the borrower has defaulted due to some genuine reasons, or we will say longer the credit history, it is better. Longer credit history will be better. But what are the warning signs? If the customer is craving for credit, they are frequently applying for unsecured loans, they are frequently and unnecessarily shopping for credit, several new accounts have opened or new requests made, it shows that the customer is a over hungry customer. The length is also important, like we just said, longer credit history better. And trade attributes, does the customer have a good mix, right? Then what or how many credit information companies are working in India? CIC is an independent third party institution whose responsibility is to collect financial data regarding loans, credit cards, about the individuals, and they share it with the members. The banks, NBFCs, are usually the customers of the CIC. And presently, there are four CICs operating in India. We have the TransUnion Civil Limited, Equifax Credit Information Services Private Limited, Experian Credit Information Company of India Private Limited, and CRIF Highmark Credit Information Services Private Limited. These have been granted certificate of registration by RBI. All right. So these are the important topics from the credit information, and this is enough for scoring 4-5 marks in the exam. Definitely 4 to 5 questions will be asked. All right. So that is all for today. And all of these topics are very important. So if you have any doubt, any query, please let me know in the comment section. I will see you again in the next session with the next important topic. Until then, all the best and thank you.